With us now is Compass CEO and co-founder Robert Reffkin. I remember when you came on and said we bottomed in December. And if you look at home builder sentiment and other indicators, it does suggest that was the case. So we're on the upswing now in housing?
Yeah, look, at Compass, I have an advantage. We have 30,000 of the best agents in the country. And so I have a very good pulse in the market from them. But yeah, I feel like we're on the upswing. It's not a great market. But it's not a bad market. It's an okay to good market. More buyers and sellers. It's not. There's enough demand to meet the inventory. It's really just a lack of inventory that's the key constraint. 30% less new listings came online this year than last year.
But it should be a worse market, shouldn't it? With high interest rates, the Fed is trying to hammer out inflation, especially in the housing market. Demand is softening.
Well, arguably, they've done their job. Prices are 1% lower than they were the same period last year. And so you're not seeing the same housing inflation that we've seen in the past.
You are in rents in New York City, I can tell you that.
Yeah.
Why isn't that coming down?
Look, a lot with housing affordability has become an issue because of mortgage rates and with prices. And so people have moved to the rental market.
It's like the used car dynamic, right? And not enough new cars or not enough lease renewals. And so people need used and they rush to use, just like they rush to rent.
Yeah, the fundamental issue we have is that 30% of homeowners are locked into mortgage rates at 3% or below. 70% of homeowners are locked into mortgage rates at 4% or below. If you have a 3% mortgage rate, you consider that a financial asset, and you don't want to lose it.
Sarah mentions how you've been constructive since December. I was looking at NAHB prospective buyers traffic, which back then was 20, 28, 31, just hit 33. What does that number do if, in fact, we get some relief in rates?
Yeah, so I think the market will be somewhat of a sideways market. Again, not a bad market, not a great market, a sideways market until mortgage rates get to low sixes. And when it gets to the fives, I think it will be a pandemic craze all over again.
Really?
Yeah, because if you have a 4% mortgage rate, you don't want to roll that into a 6.5% mortgage. But if we get to 5%, 5 1/4, you'll sell your home and get 5 and 5 1/4. What we're seeing right now is a lot of these owners that have 3 or 4% mortgage rates, what they're doing is they're buying a new home and they're renting out their existing home. And they're taking the financial arbitrage between market rents and their low mortgage rate.
How do you deal with the inventory problem? How does that get corrected? Why is it so severe?
It's going to take time. We're going to have to see mortgage rates come down to have it resolve itself in a more systematic way. That said, people do have to move. They get married, there are life events where they have kids, they get a new job.
Lose their job, yeah.
Exactly. And we're seeing return to office also drive activity. In Seattle, for example, the condo market is almost like a bull market for the first time in a while because Amazon brought back so many thousands of workers back to Seattle proper, the city, and people need to move and get a home there.
Right. Do you think we'll get some normalization in the delta between the West and, say, the Southeast or the South? I mean, that had been a real fissure.
Yeah, so the real winners in COVID were the low-tax, warm-weather states. So you have the Carolinas, you have Texas, you have Florida. But I do think with return to office, and that is going to happen, that it will bring people back to these cities. And we're already seeing it, again, in Seattle, downtown. So if you live in San Francisco, if you have a company if you work at a company in San Francisco, you should buy now before everyone comes back, because then you'll be able to get the low price.